Today, we're talking about stock investing basics. This is from where you get to know what stock investing is, to all the way to becoming an investor. So, if you've not heard of what a stock is, what it's all about, now this is that webinar that will tell you what stocks are, what is it, what does it mean to say you're investing, and from there on, how do you do the investing to make money work for you in the long run. So to begin with, I'll just get a little bit of a background of what most people do in terms of our day-to-day lives, and what we do generally with work and income and all that. So this is from our good friend Robert Kiyosaki. He talks about the cash flow quadrant on his book, The Cash Flow Quadrant. But I think most of us are familiar with the Rich Dad, Poor Dad book. He talks about that too in that book, but not a lot as he talks about it in the Cash Flow Quadrant book. Now, with this concept, he introduces the idea that a lot of people, we are taught to go to school, work hard, pass your exams, go to college. After college, you hopefully do well and go into the job market, get a job, work that job, and hopefully your employers are, giving you some sort of retirement benefits as you're working for that job for 20, 30, 40 years. You keep doing that. When the time comes, you retire and you go home and call it a day. So that's essentially what a lot of people do, and a lot of people know as life. You get born, you go to school, you get a job. After that, you work your job, you retire, you get your benefits, you go home. But that puts you right here at the first quadrant. Quadrant is just 4 sections. And in this image here, we're seeing that there's 4 sections to what income and all that is all about. And the first section is the employee. Most people grow up knowing that I'm going to be an employee, I'm going to be a teacher, I'm going to be a doctor, I'm going to be whatever it is that you want to do. And that job is the one thing that will give you an income. And then you take that income, and then you do whatever you want to do. Buy a house, take your kids to school, buy your foods and necessities, and go about your life. So here on this quadrant, it says your income has no leverage, which means you cannot take your income and say, go somewhere and say, see, I'm making this much money. Can you afford me A, B, C, D? You cannot use your income to get something else unless you're buying it outright. So you wait until end month, you get your money. If it's enough, you can pay your rent, but there's no way you can, for the most part, you can go to your landlord and say, you see, I have a job and this job pays me every end month, and therefore I would want you to let me live in this house, and then I'll pay you at the end of the month. For the most part, landlords usually want you to pay upfront. They want you to guarantee payment. That is, you're getting this place, you show us that you're going to pay. Otherwise, we cannot be assured that you can pay. So you don't have leverage to do other things like get other assets in life, unless you say take a loan, which is you're leveraging your future income to get that money today, go buy a car or go build a house or do whatever. So for the most part, a job, or if you're an employee, your income doesn't have any sort of leverage And if it has, it's very detrimental to your financial well-being. And in that quadrant, it's said that only 5% of wealth exists. So these are the people who, you know for sure they're living payslip to payslip. You know for sure they're taking all these emergency loans, and they have debt around, and you're doing a lot in terms of just keeping up with life more than owning assets. You're trading your time for money, and that's all about it. There is no way you go into buy property unless you've worked that job for a while and you've been saving for a while. So that's employment quadrant. Now we go to the self-employed. You say, you see, I'm a doctor. I am well-renowned. I can open my own practice, start a clinic or whatever. I can, do a job, have my own business, because you have skills. So you go and start a business, and with that business, you are also expensing your time so that people can come into your business and pay for the services that you provide. So when people come in, you get paid. But the day people stop coming in, you don't get paid. So as much as you think your job is so bad as an employee, being a self-employed is you're also depending on other people to come to your place of work or your job, your business, to transact your services to their money. And in that sense, there is no way you can go and tell someone, you see, I'm a doctor and I will treat you next time you get a fever. So can you give me, 10K? Then next time you get a fever, you come to my clinic, I'll treat you for it's like you've prepaid, you've paid before time. So there's no way you can go and tell someone, hey, give me 10K, and if you get sick in the future, I can treat you, and you won't have to pay at that time. So in essence, you have no leverage over how you can earn or other means of earning through your practice, which is your job, which is essentially your job. You are the employee of your own business. So in that quadrant, you don't have a lot of options. A lot of people, it says that 95% of the population is in this section. And then what that means is a lot of people think you've made it when you have your own business. You've made it when you can go to your own business at whatever time you want and do whatever you want to do. And you don't have an employer to tell you what time to go to work, the 9 to 5, 8 to 4 kind of thing. Now, that sounds, good for a lot of people. That's why the population there is around 95%. But then there is a business owner, which is a little bit different from a self-employed person. A business owner is, you have a business, you go and own that business. That is, you say you buy a business or you start a business, but in this business, you're not the active employee in that business. Your job in this business is the ownership part of the business. You are the owner of the business. What you do is you manage employees. You have your managers, your directors, your general workers, all that. You have all those people working under you. And now this employee quadrant, all these people will be working for you. The self-employed also will be working for you. So let's say you have a big hospital as a business. A self-employed person who's a cleaner can come and work for you. And a doctor who has gone to school and done the necessary can come and still work for you in that hospital. So you generally are not needed there as an entity to exist so that that business functions. Meaning, you will be looking from above and seeing everything working. You have your managers, they do everything, and maybe at the end of the day, they come and report to you and tell you, yeah, boss, the business today has been so good, and blah, blah, blah. Now, this is your ultimate goal. You want to be here. You want to be an owner. You want to own a business that gives you money whether you are there or not. That's the ultimate goal for the most part. And this is where a lot of wealth is created. As you can see, there is 95% of wealth is created in this quadrant through business owners. Now, you could be like, okay, for me to own a business, say a hospital or a clinic or a school or a restaurant or whatever, where some other people could be working there, but I won't. I'll just be the owner. You'll say it needs a lot of money. So a lot of people cannot afford that. A lot of people cannot be able to achieve that. And that eliminates access to this quadrant for, a lot of people, the 95% of the population. So if you are here, then you are the lucky, say, top 5%. And that makes a big, big difference in terms of how you earn your money and how your money will then earn you more money in the future. But then if you are not able to afford some of these things, the next thing to do is be an investor. Find this guy who owns a business and tell him, you know what, I see you're starting a school or you're starting a hospital, a clinic. I have 100K. Can I give you 100K, put into your business, and then we do some sort of equity sharing the profits at the end of the day. And then if I choose to take my money out, we can figure out how it goes. So as an investor, you don't have to put all the money up front for you to own a business. You can be a partial owner of a business. You can be you could be 50-50. You are owning the business with someone else. Or you could be a small investor, putting in 10K every month into someone else's business. And in return, you get money back in terms of either dividends or share of profit, which is essentially dividends. But this is where this 95% of the population needs to migrate to and now become investors, and therefore putting their money to work on their behalf. That's the ultimate goal if you know you cannot afford to own your own business. So that's where we are today. We are talking about investing. And what investing essentially is you're taking your money, you're putting into someone else's business, company, activity that you know will guarantee you some sort of return after a certain time frame. So if you find such a business and you have a little bit of money, you can do that. But then it gives you that idea of where do you find these businesses? How do you go around talking to business owners and telling them, I want to invest in your business? Well, that process was simplified for the most part. And now, instead of going around in your local town looking for businesses to invest in, there's businesses in the stock market. The stock market is where all the businesses go when they're looking for people to invest in their businesses. So when Safaricom started and they said, we need money so that we can put up all this infrastructure, all the cell phone towers, all the services, all the employees, all the M-Pesa network, or whatever it is that they're doing, their softwares and whatnot. They said, we have a business idea, but we don't have the money. How do we get the money so that we can do this business? And they said, what we're going to do is do an IPO, which is an initial public offering, which is saying they're inviting the public to engage in the investment affair of that company. And when that happened, a lot of people jumped into the investment IPO phase of Safaricom. A lot of people made money. Safaricom went from, I think it was five bob, all the way up to 30 something at its highest. Even though right now it has gone down, but that's a story for another day. So that whole process has enabled a lot of people to invest their money in a company without them even meeting the owners of Safaricom, the majority shareholders, without them going to Safaricom and talking to them in person, without them trying to figure out what is your cash flow, what is ABCD, all done automatically through the NSE, and people made money and others got rich. People started earning dividends, which is a share of profit that Safaricom was making. And that is the ultimate goal for you as an investor, is to be able to earn money without you putting in any sort of effort except your money. So the stock market is the game changer for a lot of people. Most of us have little incomes. Most of us are struggling here and there financially, dealing with living payslip to payslip. You're dealing with a lot of probably a lot of emergency loans and all these mobile loans. To avoid all that, I suggest that, one, you do a little bit of housekeeping to your financial situation. Try and see, what do I have that is hurting me financially? Are you living an expensive lifestyle that you cannot afford? Are you, expensing too much on things that don't bring you income? Things like you want to buy a car, but all the time you're spending in that car is going to work and coming back home. At the end of the day, you realize this car is, yes, is an asset, but it's a depreciating asset. But at the end of the day, it doesn't really offer much in terms of generating income for you. And you can say, instead of me driving this Mercedes, instead of me driving this Subaru, let me say downgrade to a Toyota, which will cost me less in terms of fuel, and I can save a little bit of money here and there. And then I'll take that money, put it in a company through the stock market. Now, the stock market is just like any other market. I know of a friend who says the stock market is just like the mango market. You go to the market to buy a mango. There's vendors there with mangoes, and you can pick which vendor you want depending on the mangoes they are offering and the sizes and the color and whatever. And your idea of why you're buying this mango is you want the nutrients, the enjoyment you get from eating it. Same to the stock market. The stock market is out there for you to go and pick the companies that will give you the juice or the nutrients. And that is the companies that will grow over time, and like Safaricom grew over time, or companies that will pay you dividends, or both. You don't have to pick one or either. Depending on your needs, you can go for dividends, you can go for growth, you can go for future income. All that the market offers. The stock market is the place to go. So once now you've discovered that you have the stock market as the place to go for your investing, and then turn around this situation where you are an employee and now you become an investor and your money works for you whether you're there or not. And that's where you want to go to. That's the ultimate goal. You get there, you are set, your money works for you, and everything seems to be perfect. Now, we are at the stock market. Now what next? You have money, you know yourself, you've put aside money, your savings or whatever. Now you have money, now you know where to put your money at, but then what next? How do you venture into the stock market? So the stock market has something called a broker. in Kenya, we have the Nairobi Stock Exchange. Nairobi Stock Exchange is the market for all the companies to sell their shares. And then at the Nairobi Stock Exchange, there's brokers, people who connect you as an investor to the stock exchange. So we have a lot of them. I know of Dan Blair. I know of Kingdom Securities. I know you know them. If you've been a little bit conversant with the market, you know them. So the next step is go find a broker. You find a broker, this person will take you to the market. And when they take you to the market, some of them will charge you commission, say, you see, I'm the one who showed you where the market is, give me something small, 1%, 2% here and there, or whatever. So if you find a broker, that's the person who's going to take you to the market. And now you have access to the market and you can buy stuff and buy stocks and then eventually move on. Now that whole process happens in, very short time frame. You for Kenya, you have to have a CDS account, and then you get a broker, and then you have access to online trading, and then you can, boom, you're gone. Now, for me, I'm introducing this other idea that markets are not just where you are. Markets are all over the world. You want to buy stuff in Nairobi Stock Exchange, cool, no problem. But realize that you're not restricted to just buy within the country you live in, within your borders. You can buy within East Africa, you can buy within Africa, like say go to the Johannesburg Stock Exchange, or you can buy all over the world, Singapore, London, New York, And that's the idea that I'm trying to push out there, that as much as you want, that you can make money in the stock market, the next thing to do is figure out which stock market will work best for you. Yes, local stock market is good for you because you're there, you can, do a lot of that stuff. But offshore or outside Kenya, brokerages and stock markets offer you diversity and more opportunities. And that's why I'm introducing this New York Stock Exchange. New York Stock Exchange is a stock exchange in the American stock market. And the American stock market has a lot of stock exchanges. Not just the New York Stock Exchange, they have the NASDAQ, they have the Edge, they have the Philadelphia Stock Exchange. So they've had stock exchanges all over the country. There's a lot of things going on in the American stock market. But the most that people know is the New York Stock Exchange, because that's where Wall Street is, that's where all these big financial banks are, and gateway to the American stock market. So now we have the American stock market, and now we're asking ourselves, okay, who is the broker that can get me to the American stock market? Who is this broker? Because I know for me to go to the Nairobi Stock Exchange, I'll probably get Dan Blair or whatever. But what about the American stock market? Well, the American stock market has a lot of brokers. I know some of you have heard of Robinhood. Some of you have heard of, I don't know if you've heard of them, but eToro, I think that's the name. Some of you have heard of Merrill Lynch, Fidelity, Charles Schwab. These are brokers in the New York Stock Exchange or the American market. But because you are outside the country, chances are some of these brokers don't allow you to invest through them. So what is available for Kenyan investors in the New York Stock Exchange, when it comes to brokers, we have Interactive Brokers, which is top among the brokers that offer, trading to the New York Stock Exchange for foreigners who are not American citizens and residents. So number one at the top there is Interactive Brokers. There is TC2000, which is a broker, and then there's a Speed Trader. So these are brokers that will get you to the American stock market, but I highly recommend interactive brokers because they are easy, straightforward. They offer a lot of securities and the likes. Now, you are now able to access the New York Stock Exchange through, say, interactive brokers. And in the New York Stock Exchange, we have a lot of things goes on in the New York Stock Exchange. There's a lot of companies. You hear of around 10,000 plus companies and securities. So that gives you a lot of opportunity to invest. And I think one of the ways to recognize some of these companies is most of you know Facebook. You've been on Facebook. That's a company in the New York Stock Exchange, and it goes with the ticker symbol FB for Facebook. Now, some of you have heard of Amazon. Some of you have heard of Microsoft because we use these products. And that's the thing about investing is you're already using some of these products and services. Why not invest in the things that you consume as a consumer? Why not invest in Safaricom when you are using Safaricom to make calls and text and data and whatever? Why not invest in Colgate? Right? Colgate is a company in the New York Stock Exchange. Is it? Yeah, it's a company in the New York Stock Exchange, and some of us use Colgate as a toothpaste. Why not invest in a company that gives you a product like that? So, in essence, what I'm saying is, the New York Stock Exchange has a lot of stocks, almost close to 10,000. And now, just like any other market, the New York Stock Exchange has other varieties of securities. Yeah, just like a market, we might have a mango, you have oranges, you have avocados, you have whatever. This market also has different items on sale. So they do stocks, they do futures, they do commodities, they do ETFs, they do index funds. And I think that's what I've been handling in the previous webinars, telling you what ETFs are, what index funds are. I touched a little bit on commodities, all that. So you want a market that gives you variety, and then you can go and choose and pick. Unlike, say, the Nairobi Stock Exchange, which has a handful of companies, and you're stuck with them. Either one you pick, there's a problem. Either it never moves for a whole month or two, or it doesn't do ABCD, and you're there stuck. You're wondering what's going on. The New York Stock Exchange has a good alternative when it comes to options. You can buy a lot of things. If you're into options, option trading is a thing in the New York Stock Exchange. If you're into futures, it's there. If you're into whatever it is, ETFs, yeah, but that's a story for another day. You are a new investor. Now you've gone to the market. Now you know what to buy and what next. So through your broker, you would be able to make trades and therefore be able to buy a company or a stock of a company and sell the same. Now, the whole process of buying and selling we'll tackle that on the next webinar. But what I wanted to just say is the New York Stock Exchange offers variety in terms of price. So if you're worried about, say, Facebook, which is, I don't know what price is right now. Let me see. So Facebook is going for $158, one share. Some of you are like, oh my God, how do I buy that when, that's, let's do calculation. Kenya shillings to dollar right now is a problem. How am I supposed to buy this when that's the price? Oh wait, you can get stocks from pennies on the dollar, which are called penny stocks, to thousands upon thousands like Berkshire Hathaway, which is I think $50,000 a share. That's another story. So in the New York Stock Exchange, you have options. You can buy whatever price that you want, and it ranges from several cents to thousands of cents. So I wanted to give you an example of a stock that did well in the last few days that I've traded in some of my investors' accounts. This is Avid Bioservices, is a biomedical company, and as you can see, in the last few days, it was at the bottom right here, this accumulation point, and then today that's where it is. Don't know how what it has made today. 2%, no big deal. But let's see from, let's say, the accumulation point right here up to there. That's 24% in the last 6 days. So this is 24%, and this stock was going for $11.99 at that time. Now you can see that you have a lot of options from whatever price. We can find a stock that is $5, we can find a stock that is $20. It depends with your pocket. Just like the market, you can go find a mango for, $5, $5. You can find another one for $20. You go somewhere expensive and you can find one for $50. It's up to you to decide which one do you want to buy, either the cheap one or the expensive one, and what are the advantages. You might buy the cheap one and get worms in the mango, or you can buy the expensive one and find out it's just the same as the other one. So as a market, this offers you a lot of options. You can buy any value, anytime, anywhere. Now, let's go back to what we are talking about. We've talked about the New York Stock Exchange, which is the American Stock Exchange. It's the oldest stock exchange, I think. If I'm not wrong, it's one of the oldest stock exchange in the world. That aside, it has a lot of securities. You can buy a lot of stocks, a lot of ETFs, among other things. So for today, I was just trying to bring in this idea of what is investing. How do you go from I'm making an income from my employment all the way to I'm now an investor and I'm making money passively through dividends and other things. And as you can see, it's a whole process, but if you know what you're doing with proper guidance, this thing is easy. You can shift all very quickly from being an employee for life to being an investor and living life full of freedom. And that's what most people are looking for. You're looking for financial freedom. This is your gateway to financial freedom, to a point where you can make money when you're sleeping. You can make money whether you're there or not, whether you're trading in person or not. This is the goal. If you get here and be able to make money through the stock market, then you'll be good. Now, as I indicated, this is part one. Part two would be the actual process of, let's say, setting up a brokerage account, starting how to trade, what to do when you're trading, among other things. But for today,